In the prior video, we saw how to set up the DOIs so that data that is not being selected by the JIB, initial JIB process does get selected. So after we do set up those DOIs and reset JIB and rerun initial JIB, what we should do next is go to reports, JIB reports, go to the company, select the period, and run the pre-invoice proof report. And now this should equal our trial balance for each currency. So in this case, the base currency is US dollars. So I will run this for US dollars for my gross trial balance. And I should get the same balance. So that is the same. And now do the same for the local currency. So here we go, we got the same balance. All right, so given this is the the high level check you do. Also, what you should do in this pre-invoice proof report is make sure that the split is the expected amount between the partners. This report gives you that information, the pre-invoice proof. If you need to do more analysis, maybe you want to export this to Excel. And here you're going to get more, well, you're going to get it in Excel format. So you have here this owner for this DOI, you got these two owners. This is displayed with a percentage. Same story here. All right, so now that that has been done, I can go ahead and finalize JIB. So to do that, I'll go to Finalize Journalization, select the company, and run the Create JIB Journals process. What this is going to do is it's going to create the cutback journals on the operating company, which is company 200. And if the partner is an insider, it's also going to create the intercompany journal. So it's going to create an intercompany receivable in company 200 and an intercompany payable in the insider company, in this case company 100, and allocate the cost according to the DOI percentage. If the partner is an outsider, what the system is going to do is, instead of creating a journal, it's going to generate an invoice in the ART module if the ART module is installed. Regardless of if the partner is an insider or an outsider, the system will generate the standard JIB statement after we run this process. So let's run the process. And the system generates a set of reports. So we got two journals that were created. In this case, we had just an entry in source local currency and converted US dollar from local currency. If we have two sources, we would have 4 journals depending on how we've set up JIB. So the most common way to set it up is like this, JE source and converted currency. So it generates 4 journals. So here we have the reports here, and so the journals are being generated here in company 200, and we also have journals in company 100 because this is an insider, so we have intercompany journalization, right? So at that point, we can go ahead and post the journals in the general ledger. So let's go look at, say, company 100's journal. So you see here we have intercompany entry. So this is an intercompany payable, and then the debit is the cost that is the share of this partner for the joint venture. And we have in company 200 we have a similar journal, a little bit different because There's also an outsider partner in these joint venture, one of the DOIs. So we're going to get a slightly different journal there. So not exactly the reverse of what we have in entity 100. So you see we have the intercompany part with entity 100, and we have the JIB AR, which is going to a different account, which is the account for the outsider partners. And that's basically a JIB finalization. And if we go to AR, in the invoice, okay, the invoice part, we'll see there's we will have an additional batch generated here due to the JIB running in entity 200. But for that to happen, basically the partner must have been set up here as a customer, right? Otherwise, it won't do it. So this partner 400, this customer must be the same as the partner we set up in the JIB module. Okay, and that is finalizing JIB. Remember, it's important that we post these journals, and I'll show you why. So once we go ahead and remember, we have a gross trial balance that is out of balance because we haven't cut back the billable cost to the partners. So we have this amount out of balance. Once we post the journals, this is what we're going to get. We run this again. It zeroes out. It zeroes out because the gross is cut back on the same amount on the cutback accounts. And so when we run the gross trial balance on gross accounts or gross bill codes, once we post JIB, we should get 0 here. And then our net books should also be balanced out. If it's not balanced out, it's because we missed something in the JIB. So some transactions were not selected, or the journal did not post successfully.